What if I told you one of the most powerful currencies in the world doesn't move like the others? And if you understand it, you can spot opportunities most traders completely miss. The Japanese yen isn't just another currency. It's a global signal, a fear gauge, a carry trade engine. And if you learn how it behaves, it can completely change how you trade Forex. If you want more smart trading breakdowns like this, make sure to like the video and hit subscribe. Trading the Japanese yen is very different from trading most other currencies. It doesn't just respond to economic data or interest rates in a simple way. It reacts to global sentiment, risk appetite, and capital flows across the entire financial system. This is why beginners often struggle with yen pairs. They try to trade it like EUR/USD or GBP/USD, but the yen has its own personality. Once you understand that personality, everything starts to make sense. In this video, we're going to break down how the Japanese yen works, why it moves the way it does, and how you can actually trade it with a clear strategy instead of guessing. Why the Japanese yen is so unique? The Japanese yen is often called a safe haven currency. That means when the world gets uncertain, investors move money into the yen. But why? Japan has one of the largest economies in the world and is known for stability. On top of that, Japanese investors hold massive amounts of foreign assets. When global markets get shaky, there's often a flow of money back into Japan, which strengthens the yen. So here's the key idea. When fear increases, the yen usually gets stronger. When confidence returns, the yen tends to weaken. This simple concept is the foundation of trading yen pairs. Understanding risk on vs risk off. To trade the yen properly, you need to understand one concept: risk on and risk off. Risk on means investors are confident. They're buying stocks, investing in growth assets, and taking more risks. In this environment, the yen usually weakens because money flows out into higher return opportunities. Risk off is the opposite. Investors get nervous. They sell risky assets and move into safer ones. That's when the yen strengthens. So if you see global stock markets dropping, chances are the yen is gaining strength. If markets are rallying, the yen is often weakening. This relationship gives you a powerful edge if you pay attention to it. The carry trade strategy. One of the biggest reasons the yen behaves the way it does is something called the carry trade. Japan has had extremely low interest rates for decades. That means borrowing in yen is very cheap. Traders and institutions borrow yen, convert it into other currencies, and invest in higher yield assets. For example, they might borrow yen and invest in US dollars or Australian dollars where interest rates are higher. As long as markets are stable, this strategy works. But when markets panic, traders rush to unwind these positions. They sell those higher risk assets and buy back yen, causing it to spike rapidly. This is why yen moves can be very sharp during market stress. Popular yen pairs to trade. When trading the yen, you'll usually focus on pairs like USD/JPY, EUR/JPY, and GBP/JPY. USD/JPY is the most stable and widely traded. It's heavily influenced by interest rate differences between the US and Japan. If US rates are rising, USD/JPY often goes up. If US rates fall, it can drop. EUR/JPY and GBP/JPY are more volatile. These pairs combine risk sentiment with currency strength, which creates bigger moves but also more risk. GBP/JPY in particular is known for strong trends and large price swings. It can be very profitable, but it requires good risk management. What moves the Japanese yen? There are a few major factors that drive yen movements. First is global risk sentiment, which we already covered. This is often the strongest driver. Second is interest rates, especially the difference between Japan and other countries. The bigger the gap, the stronger the incentive for carry trades. Third is central bank policy. The Bank of Japan has historically kept rates very low and used aggressive monetary policies. Any hint of change can cause big reactions in the yen. Fourth is global events. Economic crisis, geopolitical tensions, and major financial news can all trigger strong yen movements. Understanding these factors helps you anticipate moves instead of reacting late. Timing your trades. Timing is critical when trading yen pairs. The yen is most active during the Asian session and overlaps with the London session. However, major moves often happen when global news hits, especially during US market hours. If you're trading USD/JPY, pay close attention to US economic data like inflation reports, interest rate decisions, and employment numbers. For cross pairs like GBP/JPY, you'll need to watch both the UK and global market sentiment. The key is not just looking at charts, but understanding what's driving the move behind the scenes. Simple strategy for trading the yen. Let's break this down into a simple approach. Start by identifying the overall market sentiment. Are markets calm and rising? Or are they falling and uncertain? If it's a risk-on environment, look for opportunities where the yen is weakening. That means buying pairs like USD/JPY or GBP/JPY. If it's a risk-off environment, look for yen strength. That means selling those pairs or looking for reversals. Next, confirm with technical analysis. Look for trends, support and resistance levels, and momentum indicators. Finally, manage your risk. Yen pairs can move quickly, especially during news events, so always use stop losses and avoid over-leveraging. Common mistakes traders make. One of the biggest mistakes is ignoring global sentiment. Many traders focus only on charts and miss the bigger picture. Another mistake is underestimating volatility. Yen pairs, especially GBP/JPY, can move aggressively. Without proper risk management, losses can add up quickly. Some traders also chase moves. When the yen spikes during panic, it's often already too late to enter. The best trades come from anticipating moves, not reacting emotionally. Building a long-term edge. To become consistent in trading the yen, you need to think beyond single trades. Start tracking how the yen reacts to different situations. Watch how it behaves during stock market drops, interest rate changes, and major news events. Over time, you'll start to recognize patterns. You'll see when moves are likely to continue and when they might reverse. This is where real skill develops, not from memorizing strategies, but from understanding behavior. The Japanese yen is not just another currency. It's a reflection of global confidence and fear. It reacts to things that many traders ignore, which is exactly why it offers so much opportunity. If you understand risk sentiment, carry trades, and the key drivers behind yen movements, you can trade it with a clear edge instead of guessing. Start simple. Focus on the bigger picture. Combine it with solid risk management, and over time, you'll see the difference in your results. If you found this helpful, make sure to like this video and hit subscribe for more trading content like this. And I'll see you in the next one.